Hello everyone, welcome back to another video. If you're new to this channel, my name is Farhan and I help accounting students like you ace their exams. What we've got here today is a practice question where you will learn to calculate a gain or loss on the sale of a non-current asset and also learn to prepare the non-current asset account. You can see the question on the left hand side of your screen, and on the right hand side we'll have all the workings which I'll run you through step by step. So with that being said, let's begin. SC runs a food catering business, SC Food. The business purchased two motor vehicles at $60,000 each on 1 January 2022. So we understand that we bought two motor vehicles at a cost of $60,000 each, altogether $120,000, and we bought this on 1 January 2022. One motor vehicle was sold on 7 February 2023, and a check of $10,000 was received on that same day. A new motor vehicle costing $88,000 was bought on credit from Lee Motors on 1 April 2023. So in the year 2023, firstly, we have sold one motor vehicle on 7 February 2023 since its purchase date on 1 Jan 2022. And then we purchased a new motor vehicle costing $88,000 on 1 April 2023. The business policy is to depreciate motor vehicles at 20% per annum using the reducing balance method. A full year's depreciation is charged in the year of purchase and no depreciation is provided for in the year of sale. The financial year of the business ends on 31 December. Calculate the gain or loss on the sale of motor vehicle on 7 February 2023. So let's look into the workings we have got on the right hand side. So based on what we have read so far in this question, we understand that the financial year of the business starts on 1 January and ends on 31 December. And we know based on the first question that we have disposed or sold a motor vehicle, and this motor vehicle which we have sold had a cost of $60,000 and was bought on 1 January 2022, which is what we can verify based on the second line that you can see I'm placing a tick next to. All right. Now, year one of usage for this motor vehicle will be from 1 Jan 2022 until end of 31 December 2022. So basically, the financial year start and ending of the business. So in the first year of the business, we know based on the company's policy that we need to apply a full depreciation. How do we apply a full depreciation? We use the given percentage and multiply it with the original cost. The given percentage is 20, as you can see in the second last paragraph of the question, and the cost is $60,000. So altogether, that gives us a full depreciation of $12,000 in year one for this non-current asset. Okay. Now, I always recommend that you calculate the net book value at the end of the year every time you are finding the depreciation using the reducing balance method. So we want to calculate the net book value at end of 31 December 2022. And the net book value at any given point in time is simply the difference between the original cost and the accumulated depreciation. The original cost is given to us as 60,000, and the accumulated depreciation is the only depreciation that we have so far for year one, which is $12,000. So when you subtract 12,000 from 60,000, we get a net book value of $48,000 at the end of year one or at 31 December 2022. Now, let's move to year two. Now, year two for this asset, particularly, which we have sold, right? Year two starts on 1 Jan 2023 and would end on 7 February 2023 because that's the very day we sold this asset, which is explicitly mentioned in the question. All right. So you can see I'm just circling it on the left hand side where the motor vehicle was sold on 7 February 2023. Okay. Now, we also understand based on the business or the company's policy that no depreciation is to be charged in the year of sale. So that's why we have got no depreciation in the year of sale. All right. Now, the disposal proceeds, which is also referring to the amount that we would get by selling this motor vehicle, is $10,000, right? Which we have got as a check, right? As you can see, I'm circling it again on the left-hand side, and a check of $10,000 was received on the same day. So check here basically refers to you receiving some funds which you can get directly in your bank account, okay? Now, the disposal proceeds here is $10,000. And we know that during disposal, the net book value that we still had left within this non-current asset, or the economic benefits that was still available for consumption, was $48,000. So we had $48,000 worth of value remaining in this asset, but we ended up selling this asset for $10,000, which means we have sold this asset significantly less at what it was worth. All right. So we understand that we have made a loss, and the loss on the sale is simply the difference between the net book value and the disposal proceeds. So 48,000 minus 10,000, which gives us $38,000 as the loss on sale of the motor vehicle on 7 February 2023. Okay. Now, we can move to the second part of the question. So the second part of the question requires you to prepare the motor vehicles account, which is basically the non-current asset account for the year ended 31 December 2023. So the question is asking you to prepare the non-current asset account, specifically the motor vehicles account for the year ended 31 December 2023. So all transactions that happened in the financial year starting 1 January 2023 and ending 31 December 2023 with regards to motor vehicles disposal or purchases are what we will look into. Okay, so let's see what we have got. So I'll take your attention to the right hand side on the whiteboard where we have got the ledger account prepared for motor vehicle. And as you know, the ledger account is the usual 5-column format, starting with the date, details, debit, credit, and the balance. Okay. So because we're preparing the motor vehicle specifically for the year 2023, we're mainly interested in all transactions relevant to motor vehicles that happen in between 1 Jan 2023 and 31 December 2023. Okay. So to begin the year with, on 1 January 2023, I have an opening balance of $120,000, which is reported on the debit side. And this is reported on the debit side because by default, all assets should have an opening balance on the debit side. Now, the question here is, where did we get this $120,000 from? If you recall, based on the second line of the main question that you can see on the left-hand side, we bought 2 motor vehicles at a cost of $60,000 each on 1 January 2022, right? So altogether, the total cost for these 2 motor vehicles would have been $60,000 multiplied by 2, which is $120,000. In the year 2022, in between 1 January 2022 and 31 December 2022, we didn't sell any motor vehicles, nor did we buy any new motor vehicles, all right? Therefore, the cost of these 2 motor vehicles would have been $120,000 at the end of 31 December 2022, which would have been carried forward as the opening balance on 1 January 2023. And that's what's happening here. On 1 Jan 2023, we're reporting an opening balance on the debit side of $120,000, which gives us a final balance of $120,000 debit at the end of 1 Jan. Okay. Now, next, what happened? So we know on 7th of February, all right, so the date has to be in chronological order. So on the 7th of February, we know that we had sold 1 motor vehicle, right? Okay. Now, I need you to look into the journal entry every time we sell a motor vehicle. So on the left-hand side, so this is the main transaction or event where we have sold a non-current asset. And how do we journalize it? Anytime we sell a non-current asset. Every time you sell a non-current asset, in this case is the motor vehicle, what ends up happening is that your assets are going down in value. So when assets go down in value, because you have sold it, you have to reflect that reduction. And anytime assets go down in value, you credit it. So that's why we will be crediting the motor vehicle or the asset account itself. And in this case, it's $60,000, which is the cost of the asset that we had sold. All right. Now, why did this asset go down in value? Because we have made a sale. So that's why the opposing debit entry here is the sale of non-current asset account, which shows the same amount of $60,000. Okay. Now, based on this journal entry, we understand that the asset or the motor vehicle account in this case has to be credited by $60,000. So I take your attention to the ledger account on the right hand side, and you will see that within the motor vehicles ledger account on the 7th of February 2023, I've recorded $60,000 on the credit side because this reflects a reduction. And this is mainly due to the fact that we have sold this non-current asset. All right. Altogether, $60,000 credit here is being offset against the $120,000 debit that we had at end of 1 Jan 2023, which leaves us with the final balance of $6,000 debit. Okay, because obviously we had more debits than credits. Okay, now if you're clear with this, we will move to the next event that happened in the year 2023, which is that on 1 April, on 1 April, we purchased a new motor vehicle on credit from Lee Motors for $88,000. Okay, $88,000 on credit from Lee Motors. Now, let's look into the journal entry for this transaction. Every time you purchase a non-current asset on credit, in this case, it's the motor vehicle, because you are getting new asset in your business, your assets are going up in value. And when assets increase, we always debit them to reflect that increase. So that's why we are debiting the motor vehicles by $88,000. And the reason we are crediting Lee Motors by $88,000 is because we purchased this asset on credit. And at this moment, our liability or obligation towards Lee Motors is increasing. And when liabilities increase, we credit it. So basically, because assets have increased, we are debiting motor vehicles. And because liabilities have increased, we are crediting Lee Motors, both by $88,000. Now, let's look into the ledger account on the right-hand side. So we understand we have purchased a motor vehicle. And anytime you purchase a motor vehicle, your assets go up in value. And when assets go up in value, they're being debited. So that's why we record $88,000 on the debit side, okay, on 1 April 2023, with the relevant details of narration being Lee Motors, which reflects the credit purchase that we have made. So previously, we had $60,000 debit as the balance at end of 7th Feb. Now we have to add $88,000 more debits. Altogether, this leaves us with $140,000 debit balance at the end of 1 April 2023. Okay. Now, in the year 2023, we don't have any more events occurring with regards to the purchase or sale of non-current assets, specifically the motor vehicles in this case. Therefore, we can confidently carry this $140,000 debit balance as the opening balance in the next financial year, starting 1 Jan 2024. And as you can see, we have written opening balance, which is balance brought down, B/D, of $140,000 debit. Okay. All right. So that's all for this lesson today. You can check the videos that I've uploaded earlier, where you will find questions where we have done the accumulated depreciation account and also learn to prepare the sale of non-current asset account. All right. So these questions are very important for your exam, as we have noticed in the past many times these questions appearing. Now, if you need monthly coaching sessions, I strongly recommend you to book a free Zoom call with the link, which you will find in the description. You must bring your parents, and we will discuss and tailor the program according to your requirements and help you prepare for the exam at the end of the year. So with that being said, I'll conclude today's lesson, and I'll see you in the next video.